Hi, Tom Lydon here in Hollywood, Florida at the Inside ETF conference. I'm here with Debbie Fuhr, who's a co-founder and partner of ETFGMI. Great seeing you, Debbie.
Nice seeing you.
We've been friends a long time. I depend on your data all the time. You're really good about keeping the industry posted as far as flows, what's happening not only domestically but also overseas. Walk through some of the maybe surprises or highlights that you saw in 2017.
You know, 2017 was pretty surprising when we looked at the record level of assets everywhere in the world, record levels of net new assets going into ETFs. We also found that there were an increasing number of institutions using ETFs, an increasing number of mutual funds using ETFs. Robos are really becoming a big thing where they're looking at ETFs, and many of them are trying to get off the ground. We're also seeing financial advisors and platforms looking at ETFs and trying to compete, and should they offer zero commission trading, or how do they win those clients, because that's really the challenge. New products that have come to market have been all over the place, thematic and ESG and smart beta and moving to low cost core. So we've seen people kind of look at a lot of new strategies and new ways of investing.
So you're not only looking at flows and keeping us posted on that, but also where that money's coming from in general. So when you see institutional flows, do institutional flows, have they told you anything? There was a while that advisors were actually leading institutions as far as flows. Have institutions caught up?
Well, it's interesting. So we actually do this really difficult study where we look at regulatory filings and mutual fund holdings to identify which institutions and mutual funds hold which ETFs. So in that study, 58% of US listed ETF assets were held by institutions. And you might say, wow, that doesn't match with what you would think.
Yeah.
The challenge is, how does the SEC define institution? And the definition is any entity that manages over $100 million. So Robos, many registered investment advisors are institutions. And you might say, well, that doesn't make sense. But for me, it does. Yeah. Because the way they make decisions is much more thorough and systematic when you're large.
Yeah.
And when you're smaller, you might not have a very rigid, well-defined way of deciding things, right?
Absolutely.
So I think we have to be careful when we talk about things, like what is the right definition, right?
No, exactly, because it's quite different. I mean, we're the state pension plan versus a large advisor that happens to manage $1 billion, right?
Yeah.
Okay, so as we move into 2018, any indications? I mean, you can also use your experience here at this conference because it's quite telling. What might you see as we look out to 2018?
So I think 2018 is going to be a year where I believe we'll continue to see assets grow. I think we'll continue to see net new assets. I think we're going to see more people using ETFs. So we recently have seen how the insurance regulator has allowed greater use of ETFs. We're seeing more platforms, more robos, and more financial advisors seeing that using ETFs make a lot of sense, because if you're buying a lot of securities, you're often not benefiting from diversification.
Right.
And so right now, I think what you need to do as a financial advisor is make sure you understand both partners that you're dealing with, whether it's men and women or two men or two women, and understanding the children. Because are they wanting to move money to the children, when and how? And if people get separated, divorced, or something happens, you need to have a relationship with that family to be able to maintain your relationship with that account.
Well, we know millennials and the next generation are huge fans of ETFs.
It's true.
And there's certain strategies like ESG that are really getting their attention. Is there a big enough sample out there as far as millennials buying ETFs? And most importantly, if you have a couple that happens to have a lot of money and they want to start bringing their kids into the fold, is the subject of ETFs a good thing to bring up?
That's a great question, because I believe that for many, robos have become the Wikipedia of how to invest. Yeah. So they go to a robo, plug in different things, come up with different models, but what are they learning about? They're learning about ETFs. So it's become a very good selling tool. Even if someone doesn't actually put their money long-term into the robo, they know how to have the conversation with you to talk about asset allocation, to talk intelligently about different products they might invest in and why, return expectations. And so I think that today what we'll find is the hybrid model. People want to be able to do their due diligence themselves and become knowledgeable, but they want to talk to you and say, does this make sense? Right?
Yeah, exactly. And I think for the average advisor out there, they want to make sure that they've got that, they're a part of that transition. Because if all their clients' kids transfer to a Robo at Charles Schwab or Vanguard or Betterment, they're going to be out of business, right?
Right.
As always, Debbie, great seeing you. Thank you.
Thank you.